Rhode Island Share and Deposit Indemnity Corporation. Our commitment to protecting your savings is carved in stone.
The one underlying thing that fundamentally bothers me is whenever the fox is left to guard the hen house. You must admit that most of the, not most, I think all of the members, or many of the members of the RISDIC board are also serving in some capacity with the credit union.
RISDIC, in fact, leads the nation with the kind of deposit insurance and the kind of protection and the kind of leadership that they have provided over the years.
These days, anyone looking for an extreme example of what happens when a deposit insurance system falls apart need look no further than the state of Rhode Island.
On behalf of all the depositors, I am declaring a bank emergency in Rhode Island.
We begin with what is perhaps the largest and most vocal protest yet by depositors who want their money freed up from closed credit unions.
We will never give up the fight until we get all of our money.
The governor of the state of Rhode Island, the Honorable Bruce Sundlun. I have never run away from a meeting in my life. I don't intend to run away from this one.
I never really thought about, I never realized that there was a difference between federally insured or RISDIC. That, it says insured. Insured to me is insured. I mean, I just never expected,
What's up, everyone? Mark here, and welcome to another episode of Down the Road, where I like to share stories of historical interest and significance right here in my home state of Rhode Island. It's been more than 30 years since the events we're about to discuss first unfolded, and while that may seem like a lifetime ago in many regards, for innumerable Rhode Island families, it was an unrelenting nightmare that dragged on for more than a year and remains as fresh in their memories today as if it had just happened yesterday. In one of the worst banking emergencies to hit the United States since the Great Depression, nearly a third of all Rhode Islanders lost access to the money in their bank accounts in a single day, lasting for weeks, months, or even longer. Today, we're talking about the incredible story of the 1991 Rhode Island banking crisis. It was January 1st, 1991, and the newly elected governor of Rhode Island, Democrat Bruce Sundlun, had just been sworn in when he and his team began preparing for an afternoon press conference that nobody wanted to have. It was events that had precipitated over the prior months and years that led to this inevitability, but it would all come to a head on December 31st and become the very first problem inherited by the Sundlun administration the next day. Before we get started, I want to take a second to thank you all for just watching today's video. If you've been to my channel before, then welcome back, and if you're new here, then welcome for the first time. I only hope you all enjoy watching these videos as much as I enjoy making them, and if so, it would really mean a lot to me if you took a second to give this one a thumbs up. When you do that, it just helps YouTube recommend it to more people who might find it just as interesting as you. If you haven't subscribed to the channel yet, especially if you've been here before, then please consider doing it now. It only takes a second, it's completely free, and it helps me grow the channel so I can keep doing bigger and better things with each new video. Just click the big red button below or the watermark in the corner, and be sure to ring the bell so you get notified whenever I post something new. Returning to our story, in order to understand what was going on, it's important to first know a few things about banks and about deposit insurance. Most banks are for-profit businesses. That is, they invest a portion of the money their customers deposit there in order to make money for themselves and to pay their depositors in interest. Investment may bring to mind things like a stock market, but it's important to remember that loans a bank makes to its customers with the expectation of being paid back with interest are also investments. In any case, because some of the money is always being invested, it would be impossible for every customer to withdraw all of theirs at once. When people are scared or uncertain about the security of their money in the bank, and this happens, it's called a bank run, and the effects can be devastating since the money is quite literally never all there. It's for these reasons that we have something called deposit insurance. Deposit insurance is just what it sounds like. It's like an insurance policy that banks subscribe to in order to give their customers the confidence that their money will always be available no matter the circumstances. Nationally chartered banks and credit unions, whether they actually operate nationwide or not, must conform to a number of governmental regulations and standards, one of which is carrying sufficient deposit insurance. The two largest insurers are federal government agencies. The Federal Deposit Insurance Corporation, or FDIC, insures the majority of banks, while the National Credit Union Administration, or NCUA, insures the majority of credit unions. While some private and state government-backed deposit insurers continue to exist today, they're extremely rare, though a few others exist as supplementary. Massachusetts, for example, has a system intended to insure any difference beyond the FDIC and NCUA caps. Speaking of which, even if you did already know what the FDIC and NCUA were, I bet you didn't know that they only insure up to $250,000, or that they technically have up to 99 years to pay you back. In Rhode Island leading into the 1990s, however, many smaller credit unions and a few banks were insured instead by the state-chartered Rhode Island Share and Deposit Indemnity Corporation, or RISDIC. When RISDIC was first chartered in 1971, it was intended to insure only small institutions, but by 1980 they were insuring more than 5 times the deposits they were when they started. Operating out of an unassuming office suite in Cranston, RISDIC flew under the radar for years, despite demonstrable mismanagement and financial trouble as early as 1985. Federal regulators, the Federal Reserve Bank of Boston, and even a report commissioned by then Rhode Island State Attorney General Arlene Violet all highlighted significant financial vulnerabilities. In fact, legislation to effectively dismantle RISDIC by requiring all institutions to obtain federal insurance was proposed in 1986 and even supported by then-Governor Republican Edward DePrete. However, it ultimately failed in the General Assembly, no doubt due to the very same problematic relationships that prompted the need for it in the first place. Making matters even worse, the RISDIC Board of Directors was composed almost entirely of board members and presidents of the RISDIC-insured banks and credit unions. It was an obvious fox guarding the henhouse scenario, but virtually no one seemed to notice, and most of those who didn't seem to care. It was business as usual for another several years while RISDIC continued to obfuscate its financial problems by exercising their sizable political clout. Laxed and loosened regulations allowed the mismanagement to continue and further allowed insured institutions to participate in business practices that were questionable, if not outright illegal. In 1990, the dominoes finally began to fall when Jefferson Loan and Investment failed due to fraudulent loans, leaving RISDIC in obviously poor financial shape. Later that year, with nearly $800 million of insured deposits now guaranteed by a reserve of only $25 million, RISDIC was ill-equipped to handle the even larger failure of Heritage Loan and Investment in November and the ensuing $13 million bank run. Heritage President Joseph Mollicone Jr. had fabricated $13 million in loans to customers who had never applied for nor received them. He fled the state, and outgoing Governor DePrete closed Heritage temporarily as investigations commenced. Ultimately, it's estimated that Mollicone had taken the equivalent of 80% of all the money on deposit at his bank, or just over $15 million. Heritage reopened briefly in December to allow customers to withdraw funds before closing again. By now, the damage was done. As news of Heritage and in fact RISDIC's larger financial problems began to spread, customers of other RISDIC-insured institutions fearing the worst began to withdraw more of their money. Fearing the inability to meet further cash demands, the RISDIC board voted unanimously to request conservatorship by the state on December 31, 1990, New Year's Eve and the eve of Governor Sundlun's inauguration. Sundlun had been preparing to act on the RISDIC issue during the first weeks and months of his administration, but not the first hours, not on New Year's Day. He'd barely assumed the job and was about to make a decision that would make him wildly unpopular with more than a third of the state, even if it was the right thing to do. By law, banks and credit unions could not operate without insurance, and with the RISDIC institutions now effectively uninsured, Sundlun declared a banking emergency, ordering the immediate and indefinite closure of all 45 RISDIC-insured banks and credit unions so records could be reviewed and federal insurance obtained. More than 300,000 of Rhode Island's 1 million residents lost access to their money immediately. The process was not fast. Though a few banks were able to get federal insurance quickly and reopen within about a week, most found the more stringent requirements of FDIC and NCUA insurance difficult to meet, and still others had their own fraudulent activity uncovered in the process. Had the RISDIC credit unions and banks not been closed, though, there almost certainly would have been a bank run leading to the failure of many more of the institutions. Even though the institutions were private, and RISDIC was neither owned nor backed by the state, a Sundlun spokesperson has said that the administration decided that the state had a moral obligation to protect depositors. Consequently, his administration set up the Depositors Economic Protection Corporation, or DEPCO, which sold hundreds of millions of dollars in bonds, and the state sales tax was temporarily increased from 6% to 7% in order to help repay those who lost money. While the governor and the state worked very hard to repay depositors, it could also be said that the state should have acted much, much sooner. Though don't forget, political connectedness had also been preventing those early attempts to act. Depositors had their houses foreclosed upon, property repossessed, and bankruptcies increased. Businesses failed, workers were laid off, and unemployment increased. Although some regained access to their money within weeks, most had to wait a year, others longer, much longer, upwards of 2 to 2.5 years. During this time, neither the invention of debit cards nor even the widespread appearance of ATMs had happened yet, and cashing personal checks at local businesses was a common and convenient way of getting cash outside of banking hours or without going to a bank branch. Local supermarket chains Almax and Stop & Shop agreed to cash and hold checks from the closed banks, giving many some form of limited continued access to their bank accounts during the crisis. In the end, everyone got their money back with interest, but it didn't come without other costs, homes and livelihoods. DEPCO had sold nearly $700 million in bonds during the crisis, and the enormous debt continued to be paid down until it was finally paid off nearly 20 years later in 2000. The sales tax increase, intended to be temporary, continues to this day. Joseph Mollicone Jr. was widely seen as the symbolic face of the collapse given his role in bringing down Heritage and the amount he'd embezzled. After 18 months in hiding, he finally turned himself in 1993. Eventually sentenced to 30 years in prison, he served 10 before being released on parole, at which time he began repaying his fines and restitution, totaling more than $12 million, the amount he was proven to have stolen. As of 2021, Mollicone was paying about $300 a month towards his debt, having repaid approximately $50,000 to date. Continuing at that rate, the debt would take more than 3,000 more years to fully repay. For all of Sundlun's unpopularity during the crisis, he took it in stride while patiently hearing people out and explaining what would be done to recover their money, one crowded auditorium at a time. He did go on to serve a second 2-year term before being defeated in the Democratic primary while running for his third term in 1994. Sundlun continued to live in Jamestown, Rhode Island until his death at age 91 in July 2011. Today, the near ubiquity of federal deposit insurance across the country largely makes occurrences like the Rhode Island crisis a thing of the past. But lest we forget that corruption and greed happen everywhere and all the time. Those who forget the things that happened here in Rhode Island may be doomed to repeat them elsewhere in the future. Thank you all so much for watching today's episode. I really hope you enjoyed it. If you did, please take a second to give it a thumbs up, or even a thumbs down if you didn't. Consider subscribing to the channel if you haven't already, and stay tuned for some old news clips from the crisis after the outro. Don't forget that remembering and retelling Rhode Island history is important, because Rhode Island's history is our history. Thanks again for watching, and I'll see you in the next one.
Rhode Island Share and Deposit Indemnity Corporation. Our commitment to protecting your savings is carved in stone.
But I think the point is well taken, Bob, that if the withdrawals proceed and accelerate, there will come a point in time where there is no liquidity.
I would also submit that there are 13 or 14 extremely well-run private insurers in this country, and that RISDIC, in fact, leads the nation with the kind of deposit insurance and the kind of protection and the kind of leadership that they have provided over the years. I'm rather not go on because I think others are going to make that point. Well, I hate to be...
Okay, Bob, just to point out, I'm not questioning RISDIC and its ability. However, the one underlying thing that fundamentally bothers me is whenever the fox is left to guard the hen house. You must admit that most of the, not most, I think all of the members, or many of the members of the RISDIC board are also serving in some capacity with the credit union.
We may, in fact, be seeking a solution that, in fact, that denies us of a very favorable available resource.
But isn't the issue not how many options you have, but how many viable options you have? All Representative Gashin's bill is stating is that when you have a situation where a private insurer who has available $25 million, and they in fact have outstanding risk of $1.2 billion, when you have that on the one hand...
I understand those figures, and I've been asking for... He said that the ratio was the same entire nationwide.
But sir, the difference is that if there is an excessive demand, which is the word of art, on a given institution...
And that's taking care of lines of credit, just like we go across the state line for lines of credit every day in the week.
Because the line of credit, sir, except for $400,000, must be secured by tangible assets.
We turn now to the story of what happens when a bank's insurance system fails. Last week, government regulators warned that the federal bank insurance fund could run out of money by the end of the year unless something's done to build it up. These days, anyone looking for an extreme example of what happens when a deposit insurance system falls apart need look no further than the state of Rhode Island. Business correspondent Paul Salmon did that and has this report.
Today, now, on behalf of all the depositors, especially the small depositors, I am declaring a bank emergency in Rhode Island.
To be honest with you, I assumed it was insured. I mean, it's on all my bank accounts. There's a big sign on the door, insured, you know, and I never really thought about, you know, I never realized that there was a difference between federally insured or RISDIC, that, you know, it says insured. Insured to me is insured. I mean, I just never expected, you know, anything like that.
For angry depositors, frustration reaches an all-time high. They want their money back, and they want it back yesterday. Good evening, everyone. I'm Ken Malloy. We begin with what is perhaps the largest and most vocal protest yet by depositors who want their money freed up from closed credit unions. Thousands upon thousands of them took to the streets in Providence today, marching, protesting, yelling, and at one point burning an effigy of Governor Bruce Sundlun. Newswatch 10's Jody Kennedy has more.
It was one of the biggest turnouts, which began with a pledge.
For the sake of our children, our grandchildren, and our great-grandchildren, we will never give up the fight until we get all of our money.
Ladies and gentlemen, the governor of the state of Rhode Island, the Honorable Bruce Sundlun.
I have never run away from a meeting in my life. I don't intend to run away from this one.
Mr. Grandy, Mr. Jefferson.
The lawyers are having a field day, generating mounds of legal documents, suing the closed institutions, their top officers, and the failed deposit insurance system that caused the mass shutdown. From this sea of blue business suits, many other lawsuits against the other closed institutions.
I have 61 cases in the clerk's offices here and in Kent County and Washington County. And I would expect that there will be more.
It took a judge in Maryland 5 years to handle all of the court cases that grew out of that state's banking crisis. Judge Giannini is hoping it won't take that long here. He's estimating about a year and a half.
So far, 16 suits have been filed against Rhode Island Central Credit Union, 7 lawsuits against Davisville Credit Union, 7 more against Marquette,